Hello and welcome to the ISE ETF and Index Outlook for April 9th, 2012. This is Patrick Seresna. As always, we start off with a chart of the S&P 500 using that spider exchange traded fund symbol SPY. Last week we identified a trend line and suggested that while the S&P should develop a topping formation along the upside, we would need a clear violation of the trend line to just give an indication that a new trend on the downside has begun. So the question becomes, did the jobs number, which had about a 20-point S&P drop on the futures market, will that this Monday morning bring about a new drop that not only breaks the trend line but also the lows of March that came in all along that 138 level? If we see any follow through selling, it may begin that much needed market correction, which we've talked about for well over a month now. If we saw that correction begin off this level, the 134, 135 would be a very reasonable downside target to anticipate for a more shallow correction. But if the correction became much deeper, a proper 10+% market correction, then we could see even the 127 to 129 level tested on the downside. While we are looking for a market correction, we're not necessarily convinced it has to be a market crash, nor does it have to be a very, very deep correction. So we're going to be, as we approach the 134 level on the downside, we'll start watching to see if the bulls start digging in, holding those support lines to create the next buying opportunity. Next year, I want to take a look at the ISE Natural Gas Index, which is a symbol FUM, and more or less the natural gas index has been channeled between the 105 to 120 area for the better part of about 7 months. We not only rejected off the top end of that range, but now traded directly back into the bottom support line, what we identify as the 104 to 106 focal point. This is a crucial moment because the whole markets are rolling over and we're seeing distribution in the broader basic materials sectors. And so if that all causes a spill effect to see distribution in many of the natural gas stocks, then a break of this level doesn't really have any major supports until the test of the October low, which occurred around that 90 level on the downside. So there really is a lot of room for damage if the support lines don't hold here. So we'll be watching that very early on this week. Next year, I want to take a look at the ISE Global Engineering and Construction Index, which is symbol CVL. The ETF trades under the symbol FLM, and we've talked about even 2 weeks ago about the head and shoulders formation that could be developing, and that the neckline violation right around this 248 level would indicate a new downdraft. And well, late last week we got that breakdown move, and really at this stage the next major support line doesn't lie for another even 5 to 7 points lower around the 230 to 235. That's a very reasonable downside target. We still don't necessarily believe this has to begin a new major bear market, just simply again a corrective pattern, which means that at some point somewhere around that 230 235 level, if support levels start holding, it might be draw in the first waves of accumulation into this index for a while. Finally, I wanted to take a look at the ISE Global Wind Index, which is the symbol GWE. The ETF trades under the symbol FAN. And really, the key thing we talked about here was that any break of this 86-87 zone would actually put this index at new lows, which really does open up the downside for any number of down legs. We identified the measured move, which goes down to the 75 to 77 zone. But there could be a couple of quicker support zones in the 80 or 82 zone on the downside. The bottom line is anytime something breaks to all-time new lows, it usually can lead to new follow-through selling. So we're going to be watching to see whether this global wind index really starts a bigger downdraft after making this break on the downside. That was your ISE ETF and Index Outlook. Thank you for joining me.